Gold against US dollar, we can see what has happened in the last 3 weeks. The price has dropped significantly, and what we can see, the price was moving sideways and then making a strong engulfing bearish bar. So we can see that the price has touched for the second time this confluence of resistance and then making a strong bearish engulfing bar, reaching the lower levels. From there, the price has returned back up again, testing this resistance, confluence of resistance, but then again making a strong bearish candle that also has closed below this one, the first one. From there, the price, when the price has closed below this, and that was here at this candle, the price is going to move down, returning back up, confirming this breakout, making retrace small and then continue to move down. You can see it's a very small candles, but the price was pushed down. As we can see, the prices this week has closed the week here in the middle between the support and resistance area here, but we can see after the making breakout, the price is rose back up, testing the previous support, now acting as a resistance. If we go to the weekly time frame, we can see that in the last 3 weeks, since the last analysis has made, after indecision candles here, the price has gone outside on the weekly analysis from the price here, which was also mentioned as a critical level. The price then closed the week here, which was also a trigger signal that the price could move down. After the price has broken below this one, which is also very critical on the weekly time frame, we can see that the price has reached this area here with this week, and then after that the price has continued to move down and close it below. This information from this here is very important because it is below that is suggesting that the price will continue to move down. So we can see this week has moved down even more, and the next support where the price could stop is around this one. First one is 1.1880, and then the next one is around this area here, 1870, and then also 1860. So we have 3 levels in front of us, and we can make a conclusion that the price is currently in between resistance and support price level. If we go to the monthly time frame, we will see that the previous month has ended as the bullish one. We can see that after strong bearish, the next one was the bullish, and then currently the price is moving down. These two candlesticks in the last 2 months were indecision, where the price was bouncing between up and down, and there was needed to see some kind of a breakout to the upside or to the downside. As it looks right now, this month is moving to the downside. And if the price continues to move down, where I'm expecting, there is a probability that there will be this month has ended as a bearish. But if that happens, then we'll see that the price is in between this resistance and this support, so where is a very open space for the price to fall down even more. And then let's see how this looks. On the weekly time frame, what we can expect. As it looks right now, my targets are for now very clear that the price will continue to move down, reaching 1880, 1870, and also 1860. These are 3 price levels, but for now I'm pretty sure and I'm confident and I'm expecting that the price will continue to 1880. This is my forecast for the next 2 weeks where the price could move, but there is also high probability that that the price will make a reverse on the weekly time frame, retesting and then moving down. Even though we can see it here, the price on the daily time frame, after the price has made breakout to the downside, the price is reversed back up and retesting this previous support, now acting as a resistance. But we also need to see that on the weekly time frame, where the price should go and make a retest. It is not the rule that the price needs to follow, but there is a high probability that the price will do that. So there is a probability that the price could move down to 1880 or 1870 and then making a retrace to the first resistance, and that could be around this one here, and then continue to move down. On a weekly time frame, this is much more visible, clearly visible, because we can see the price has here a demand zone around 1870 and also 1860. 1880 is completely open, so I'm expecting that the price will continue to move down. If we zoom out a little bit, we can see how the price behaved when the price was going down. We can see that after the price has formed this bearish engulfing bar, the next one where the price has stopped is 1860 here area, a demand zone. If we go in the past, let's find this one here, 1860. Okay, this is the fall down. We can see that the price has stopped here 1890, then making a second attempt 1884, and then making a retrace, making this bearish pin bar, and then continuing to move down. So we can see that is 1884 is a strong price level for the price, and we can expect that the price will stop here, making some kind of a small wick to the downside and then making a retrace. It is completely similar scenario here, where we have the price right here 884, and then we have the next candle. So for the gold against US dollar, I'm expecting that the price will continue to move down, reaching lower price levels. There is a probability that the price could make a reverse, making a retrace, and then bouncing back down again. So the retrace could reach this area around 1900, which is the current supply zone. Very important price levels is here 1906 and also here 1910. This is the area where the price on the daily time frame could make a bounce and also bounce again, making retrace to the downside.
That is all from today's analysis. I hope you enjoyed. If you have any question, feel free to leave a comment. If you like the analysis, click the like button and subscribe. See you next time and happy trading!